doldrums and then going into the end of the week. Speaking of the end of the week, we are going into our morning tomorrow, and it is a trading halt. So the markets are closed. The futures are open until 10:15 Eastern Standard Time. But at 8:30 a.m., we have average hourly earnings, non-farm unemployment change, and the unemployment rate, along with final services PMI. And what is interesting about the Fed Fund futures is that they were in the 42.1s here in December. So the rate cut was in December of 2027. And it's been pulled forward into October. And that pull forward into October correlated with the indices running right into a halfway back long from lows of the week to highs of the week. We had a pro gap down and go situation here this morning, but the environment that we were gapping down into was a full retracement long from lows, a measured move, a perfect measured move, one of the most clean pullbacks and touches that we've seen in most recent history. And we have a one tick front run of our support level, and it ran us right up into the direction of the half gap fill, which there was an edge for leading us into the morning. This is what the support level looked like. The half gap fill was the 65.73. The full gap fill was here at the 66.1950. And then in the process of us filling that gap, we broke out of opposing measured move shorts, giving us a long from lows to highs. If you look back at the last 4 weeks, what you will notice is that we've had many of these pullbacks. In fact, the most recent one that comes to mind here is the last time that we were running up into resistance, and it was right here. And the pullback that we had very similar to this into a counter trend long from lows ran into its support level, and we completed by a Wednesday afternoon going into Thursday, going back into March 4th. And here's the question that we were asking as we were going into the beginning of the daily doldrums. Now we're coming out of the end of the daily doldrums, was that if we had a bunch of market participants that were hedging themselves and their portfolios going into an unknown, into an extended holiday weekend, by the time that we came out of the daily doldrums, if we had not broken through this trading hours long from lows, then there'd be the potential for a hedge covering squeeze right up into our larger daily shorts. So what is also interesting to point out is that if you look back up here inside of our resistance levels, there are unfilled gaps even that we have above us all the way up into the 67, 71, 50s. And so we've come to the end of the daily doldrums, and we haven't broken through the long setups from our morning lows to highs. And the question is there enough market participants, is there enough volume as we have gone into the afternoon here to potentially squeeze those late hedges into targets and into a new high for the week? It would be a new high for the week. So we're using this bullish above line in the sand here. Now, this bullish above line in the sand also creates an environment where we would validate our larger short setup, our daily short. I'm marking this high up here at the 53.75. And so what would breaking through that long setup represent? And I'm going to zoom back out here to a 12-hour chart because it's a little bit easier to see, fit everything in the screen here and see a little bit more detail. No, let's look at a 4-hour chart here. Inside of this daily resistance level, you can see how that would very clearly be perceived as... This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.